This is Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to follow Wall Street higher as oil prices ease, with President Trump putting a 2 to 3 week timeline on ending the Iran war. The S&P 500 earlier staging its biggest rally in more than 10 months. As his frustration grows, Trump again blasts US allies, telling countries facing energy shortages to, quote, go get your own oil. And OpenAI's valuation tops $850 billion after a new funding round led by Amazon, Nvidia and SoftBank. Well, no doubt about it, it was a tremendous rebound rally that we saw in US equities overnight. And in fact, that sort of retreat of risk across most asset classes will be front and center when it comes to the Asia Open as well. The question, of course, is really the durability of that rally and how long it can be sustained, given the degree of uncertainty we still have, given, of course, we are used to this presidency as well as on the Iran side, just a fair degree of disagreement in terms of where we're going next. But take a look at what we're seeing when it comes to Brent crude at the moment. We're seeing downside of about 3%. New York traded crude still a little bit elevated, 0.8%, but a pretty steady picture when it comes to energy. Still weighing the outlook for the Middle East war, the signal for openness to a resolution to the conflict, the signal of that 2 to 3 week timeline for retreating potentially is at play there. But of course, there's been a lot of assets that have already faced destruction in Shery. There's questions as to how quickly they can come online and if the end to the war doesn't come with a reopening to the Strait of Hormuz.
Yeah, at least for now, when it comes to those de-escalation hopes, they have led to that risk-on mood. And we'll see if that translates into the Asian session, because U.S. stocks rallied in the overnight session with the S&P 500 seeing its best day since May. And we can see U.S. futures at the moment gaining almost 3% early in the Asia session. Now, of course, we have seen those concerns around, as you mentioned, Heidi, disruptions in the energy markets. And that's why we had that immense pressure on Asian equities. But right now, futures pointing to some upside. And the Kospi futures, 6% upside at the close. Nikkei futures also trending a little bit higher after 4 sessions of losses for the Nikkei, already at the lowest levels of the year. The Japanese yen also a little bit more stable. And today, of course, the key data point here in Japan will be the Tankan survey. So how are businesses feeling here in Japan? Very key when it comes to the monetary policy path as well. JGBs rallied in the previous session. We also had Korean bonds rallying. It's been that reversal when it comes to the Treasuries picture as well. If last week we're concerned about inflation and rate hikes, this week we've been concerned about growth. So we had a rebound in the Treasury space as well, with the 2-year yield below that 380 level, Heidi.
Well, Shery, President Trump says the U.S. will leave Iran within 2 to 3 weeks, suggesting his military goals have been largely accomplished. He says while a deal with Tehran is still possible, it's not necessary to end the war.
I had one goal. They will have no nuclear weapon. And that goal has been attained. They will not have nuclear weapons. But we're finishing the job. And I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
Let's bring up Bloomberg Politics editor Laura Davis and our Washington and White House correspondent Jeff Mason. Jeff, let me start off with you. What did we really hear from the president here, and what's the tone of kind of, I guess, the context of this latest strategic shift?
Well, what we heard is the time frame, and that's the question that we've been wanting to know for a long time. I was in the Oval Office for that back and forth with the president just a little over an hour ago now, and asked him if when he said 2 to 3 weeks, if he meant that's when the U.S. is going to be done with the war. And he said yes. I do think it's a really important piece of context to say that the president often will throw out timelines that end up changing. And that applies to things in foreign policy. It applies to domestic policy. It applies to a lot of things. So just keep that in mind in terms of context. But the broad answer to your question is we've been wanting to know basically what the end game is in Iran. And today he said the end game will be in that time frame.
And Jeff, we have heard from the president as well, really calling on allies to step in when it comes to the Strait of Hormuz. Any more indications of where we stand there and where we could go in terms of other world leaders also joining in trying to end this war?
Well, he has been very critical of a number of U.S. allies, including the UK, for not helping more to open up the Strait of Hormuz. And in the Oval Office today, he basically said, I don't care anymore, and it's your problem. And when we leave, if France needs to get oil they can handle that themselves. And that was one of the countries that he mentioned. How that actually will work in practice is another question. And the political ramifications of that for him are not minor. Certainly the markets are very happy to see a time frame for this war to end and for oil prices to settle down a little bit. But if the Strait of Hormuz remains closed, even if the war is over, that's going to have ramifications that are major for U.S. allies and for the United States, even if it's true that the U.S. doesn't rely on it as much as some other countries in the world do.
And Laura, of course, the issue so far has been that the president continues to reiterate that the conflict will end soon. But at the same time, we haven't necessarily seen any signs of compromise coming from Iran. Do we have a little bit more positivity now that the Iran state media seems to be indicating the willingness to end the war from the president himself?
Yes, Iranian officials have suggested that they are open to an end of the war, but they've reiterated their 5 asks. 3 of those are essentially related to the ending of hostilities, both in Iran against proxy groups and also a pledge that there will be no more attacks from the U.S. or Israel in the future. It's unclear if Israel, however, is on board with this plan. Trump had initially indicated that he would do everything in concert with Netanyahu. It's not clear that's happening now. The other 2 asks are a little bit interesting. One is for reparations. That seems far-fetched that Iran would be able to get money from the U.S. and Israel to repair damages from the war. But the other key piece that they're asking for is recognition of their authority over the Strait of Hormuz. Iran has a little bit of leverage there. They are effectively controlling the strait now. And if this war were to end, or at least there were to be some sort of cessation, ceasefire of hostilities, that is a card they can use and some leverage they can to try to get an outcome that they're looking for. They can agree to give up a little bit of authority there to get something else on the other side. So Iran goes into this, potential end to the war with not everything that they want to get, but the ability to at least get secure some wins out of this.
Jeff, is this more of a situation where the president has realised going forward is becoming increasingly untenable to continue the war as opposed to having the strategic goals actually achieved? Because that seems to be a moving goalpost since the beginning of the conflict.
Oh, it's absolutely a moving goalpost. And it's interesting as well how his rhetoric has changed. He, at the beginning of this war, said he wanted regime change. Then he has said today that was not a goal, but he said his view that the regime had changed, even though the current Ayatollah is the son of the previous Ayatollah who was killed on that first day of the war. So, yes, I think to your question as to whether or not he thinks it's increasingly untenable, certainly he's feeling more pressure. And a lot of that pressure is economic. Of course, we know the midterm elections are coming up in November in the United States. And if gasoline prices remain where they are now, which is right around $4 a gallon, that's really hard for the Republicans when they're trying to hold on to power in Congress. So all that said, I would repeat what I said earlier. The president did go into this war for a reason, and he may be ready to move out now because of those ramifications, but he changes his mind a lot. So stay tuned over the next 2 to 3 weeks if he changes it again.
Yeah, which is why U.S. allies, of course, are having a hard time gauging what to do with this war. Laura, French President Emmanuel Macron is in Japan this week. He'll be visiting Korea as well. When it comes to European leaders, we have actually seen them harden their stance on the war even more.
Yeah, we've seen just in the past 24 hours or so that Spain has closed its airspace. We've seen Italy decline to allow the U.S. military to use some air bases. This is a sort of, building upon a couple weeks ago when Trump was asking European allies to send ships and resources to the Middle East to help secure the Strait of Hormuz, and essentially everyone rebuffed him. We're starting to see, sort of even furthering that everyone is looking to, at least European allies, looking to further distance themselves from this conflict. It raises a question of once the U.S. or if the U.S. were to back out of this, does that open up a little bit more negotiating room? Because Trump, there's growing tensions between Trump and the EU, as well as Iran has not viewed Trump as a reliable negotiator to work with here, because every time they've entered into negotiations, there's been attacks that have followed, at least in recent memory. So this is, sort of opening up some strange alliances. What we're seeing, what have been kind of really close U.S. relationships, now having East Asia allies like Japan and Europe more closely related in some of these global conflicts.
Bloomberg Politics editor Laura Davison there, and also our Washington and White House correspondent Jeff Mason, who joins us from around the White House. He was speaking to us just moments after being in the Oval Office with President Trump. We have seen the de-escalation hopes around the Iran war, sending oil a bit steadier. We saw those drops in the overnight session. Stocks staged a comeback as well. Traders weighing whether the Iran war could end sooner rather than later. Our chief correspondent for FX and Rates in Asia, Ruth Carson, joins us now for more. Ruth, it's been really interesting to gauge the global picture because last week we had oil prices higher, treasuries under pressure, and now we have exactly the opposite picture right now. What are you watching?
It is incredible to see how markets have turned quite a bit in terms of their tone in a matter of days. But I suppose it is a war that is, dragging on longer than a lot of people had expected. And definitely that's weighing on investors' minds. So we did see stocks rally overnight. We did see treasuries rally overnight as well. And right now, particularly among the macro watchers, the question is, how long is this war still going to extend for? And importantly, will it end before demand destruction becomes real, before an economic shock starts to reverberate, from New York through to Tokyo? And that's why we're seeing bonds actually rallying. We're seeing bonds rallying with stocks. We're seeing a change in tone from, say, a week ago even, say early last week, where bonds were still under pressure because everyone was pricing in higher oil and what that means for inflation. Now, do we buy bonds for safety? Is the question that's being asked around.
What happens now with the dollar?
Yeah, and it's a great question because the one asset that has truly performed, fifth week into the war now is the dollar. It's called King Dollar for a reason, and it has risen significantly against every currency out there. It doesn't matter if you're a developed market currency or emerging market. Everyone's been piling into the dollar. Now, should the war end soon, we'll probably see a lot of profit taking. We'll see the dollar start ebbing a little bit. But again, it's coming from elevated levels. And right now, we don't know if the timeline that President Trump has put out, will hold. We've seen him change his mind multiple times. So can the dollar bet truly be, over? No, not yet. Not at least for a couple of sessions as people sort of figure out what's going on.
And of course, we have also been weighing U.S. economic data, including that surprise upside to consumer sentiment, not to mention that the job picture, though, seems to be a little bit sluggish. When it comes to the trajectory of the U.S. dollar, the treasury space, and the rate differentials with Asian assets, how are we expecting that to impact trading in the yen, trading in the Korean won for the rest of the week?
I think it's important to definitely look at the dollar, trading the dollar as a haven asset. That has driven a vast majority of the flows. In some aspects, talking to money managers, traders, rate differentials, economic data, they're important, but they're secondary at this point in time to what's happening with headlines from the war. And that has jolted trading in the dollar higher. It has, spurred investors to sell treasuries, for instance, up until last week because of all these fears. Now, what does that mean for Asia? Asia is in many aspects almost like collateral damage. We've seen the yen really underperform, and late last week we crossed the 160 per dollar mark, and it really shows the pressure here. Buy dollar, sell everything else, and that includes Asia. It means the won, it means selling the yen, it means selling the Aussie dollar, which is under 70, and anything you can get your hands on.
Our chief correspondent for FX and Rates in Asia, Ruth Carson. Let's take a look at some of the movers that we're seeing at the moment. And of course, some of the big winners over the past few weeks as this conflict has been ongoing, as oil prices and energy prices have soared, have really been the energy names, LNG, as well as oil-related names here in Australia, across Korea and Japan. We'll be watching for those at the open in those markets as well. But we are seeing, not unexpectedly, that correction now, or a little bit of a retreat, given how much these stocks have really gained in the last few weeks. We're seeing Woodside Energy down by close to 2%. A bit of downside for the oil major Santos there as well. Viva Energy, Cardon Energy, both low And in fact, we're seeing the biggest decliner down by just over 4% there. So that LNG heavy energy sector, though, I will say when you take a look at a quarterly view, if you pull back on that, we have seen a record quarter as we've seen the tightening of global fuel supplies, the boosting of LNG exporters as well, that strong demand, the supply side story really intensifying competition for the limitations on cargoes and lifting prices, margins looking very good for Aussie gas producers. So that morning look snapshot there is not reflective of what we've seen over the past quarter, Shery.
And Heidi, we have much more analysis ahead, especially on that impact from the Iran war and also how global geopolitics is looking right now. Plus, ANZ also joining us in the next hour to explain why they think markets are still underpricing the disruption to energy supplies. Much more ahead. This is Bloomberg. OpenAI has closed its largest funding round to date as the company pushes to acquire more chips, data centers, and talent. For more, let's bring in our Asia tech correspondent, Annabelle Drewlers in Hong Kong. Belle, we're talking about more than $120 billion of funds raised, a valuation of more than $850 billion. Those are big numbers.
Yeah, they are some really big numbers. And this is fundraising as well that's been in the works for months. Actually, the majority of it came from three backers, which, again, we had been reporting on, but Amazon, then also Nvidia and SoftBank. So just to break down the numbers, so Amazon's tipping in around $50 billion. A large portion of that, actually, so $35 billion of the $50 billion is contingent on OpenAI going public or reaching the technical milestone of AGI or artificial general intelligence. So huge challenges really in front of OpenAI on both fronts. Nvidia and SoftBank each putting in around $30 billion each. So we're at $110 billion now. The other $12 billion came from some backdoor financing channels, actually, but also from some very prominent backers. So those included Andreessen Horowitz, MGX, for instance, it's based in Abu Dhabi, D. Shaw Ventures, TPG, T. Rowe Price. Lots of different backers came into the mix. But essentially here, OpenAI is saying the financing is going to give it really a lot more flexibility as it tries to increase its AI infrastructure, also acquire the talent that's needed to achieve its goals as well. So it is an interesting moment for the company. We've been reporting, of course, on how it's looking to streamline its product roadmap and also trying to increase the amount of revenue it generates, because on Tuesday as well, the company said it's currently generating around $2 billion in revenue each month.
But Nvidia, in the meantime, has also invested in its fellow chip company, Marvell. What's the thought behind that?
Yeah, this is an interesting move and something, of course, that was asked of Marvell at least. Why one chip maker investing in another chip maker? His view, and he shared that with CNBC, was really about trying to increase the broader ecosystem and application of both of their products. He doesn't necessarily see it as a zero-sum game, but Nvidia is taking a $2 billion stake in the business, and the companies as well are going to be working on what's called silicon photonics together. Now, silicon photonics, it's a nascent technology, and it also has the ability or the potential ability to scale AI infrastructure by speeding up data transmission, but you're also using less energy. So you can see here, markets really liked this deal. We saw Marvell there up more than 12% into the close. Nvidia was also higher. Yeah, but as you said, there was some concerns around that unusual nature, but Marvell certainly at least has put that to the side for now.
Annabelle, all of these billions and billions of dollars being raised, also being invested. We have news from CoreWeave as well.
Yeah, this is quite a significant deal. So CoreWeave announced that they've raised $8.5 billion from a group of investors. Now, that is actually seen as an investment-grade loan. It's been secured by a combination of microchips that includes GPUs, and also secured by a customer contract to use those chips. And we've previously reported at Bloomberg that Meta actually, that contract would be backed by Meta, worth at least $19 billion. So there was a long list of banks that worked on this. There was Mitsubishi UFJ, for instance, Morgan Stanley. They provided the new loan, but then also Goldman Sachs, JP Morgan, they joined the transaction. Blackstone was an anchor investor in it as well. So it is sort of a nascent area of financing, but one that really is expected to grow. And one of the reasons that lenders view debt secured by microchips as a safer way of putting money to work, especially when they are backed by the contract of a huge company like Meta. So yes, essentially CoreWeave is saying that there's just so much demand for its infrastructure, and that's why they need this loan.
Annabelle Druller's there with the latest tech stories and all of that tech capital flowing at the moment. And of course, technology in focus when trade opens here in Japan and also in Korea. Keep an eye on memory names, including Samsung and SK Hynix. Beyond the broad risk-on mood driven by developments in Iran, traders will be watching the durability of the AI trade and whether the sell-off that pushed the Kospi to the brink of a bear market presents perhaps a buying opportunity. Kospi futures rallied sharply overnight, Heidi.
Shery, let's get some of the corporate headlines that we're following. And Unilever has agreed to combine its food business with McCormick in a nearly $45 billion merger. The spice maker will pay almost $16 billion in cash and the equivalent of over $29 billion in shares for most of Unilever's food unit, which includes brands like French's Mustard, Knorr Stock Cubes and Hellmann's Mayonnaise. This leaves Unilever and its shareholders with a 65% stake in the combined entity. Nike shares slipped despite beating sales expectations due to concerns that the war in Iran could worsen weakness in the region that includes Europe and the Middle East. The sportswear giant posted fiscal third quarter revenue of $11.3 billion, above estimates but flat year over year. Sales for both the Converse brand and EMEA region missed estimates. Indigo has named IATA Director General Willie Walsh as its next CEO, just weeks after Peter Elbers resigned. Walsh is expected to take charge of India's biggest airline by early August after his tenure at IATA ends in July. Indigo's mass flight cancellations in December triggered one of India's worst aviation crises and resulted in a subsequent plunge in quarterly profit. More ahead on the Asia trade, this is Bloomberg.
The top global headlines we're following. U.S. Trade Representative Jamieson Greer says preparations for President Trump's meeting with his Chinese counterpart Xi Jinping are still on track. Greer downplayed the prospect of further delays in talks between the two leaders after the high-profile summit was postponed to May. He also told us exclusively that he's optimistic about future relations with Beijing.
We don't see a need to change our policy. The Chinese want stability. We want stability. I actually see a positive agenda with China going forward, where we learn to manage our trade with each other, where we pick the kinds of things we want to be selling to each other, things that are mostly non-sensitive to avoid some of the national security elements that prove challenging in negotiations. I see stability with China over the next year.
China and Pakistan have issued a joint call for an immediate ceasefire in the Iran war and for safeguarding shipping through the Strait of Hormuz. Both countries urge protection for vessels and crews and a swift return to normal navigation in and around the strait. China and Pakistan are backing peace talks and calling on all sides to refrain from the use or threat of force. We have more ahead on the Asia trade. This is Bloomberg.
Well, lots of developments, at least according to what we're hearing from the Oval Office, right, Shery? President Trump saying that he's set the 2 to 3 week deadline now that we have in terms of exiting the US war in Iran. We don't know what the implications are in terms of Israel's operations, of course. But if you listen to the president, he seems to think that the objectives have been achieved, that the nuclear deterrence objective has been achieved, that the regime when it comes to Iran now is in a better state than it was before this war. So a lot of this has fed through, obviously, to the positivity in the markets, right, Shery? But the question is how much of that positivity is going to be long-lasting, given that potentially the US exit from the Middle East conflict won't come hand in hand with the Strait of Hormuz being reopened?
Yeah, that's what struck me as really interesting. So the president is now sort of changing the goalpost in a way, saying that an agreement with Iran is not necessarily the objective, perhaps, that is not necessary for the war to actually end, that the U.S. can actually leave when Iran is not able to obtain nuclear weapons. So that, I guess, gives that positive spin to what's happening with the conflict, and perhaps the de-escalation hopes that the markets were expecting is getting another boost. Let's actually discuss the implications right now and what the president means, and also perhaps the Iranian side of things as well. Our next guest actually says that Tehran can win this war outright. It cannot win it, but it can actually force the U.S. to retreat. Jessica Genauer is academic director of the Public Policy Institute at the University of New South Wales. Jessica, great to have you with us. So is this sort of what's happening right now? Because the U.S. doesn't necessarily seem to be winning the war. President Trump doesn't seem to be wanting an agreement right now in order to be ending the war. Is this more of that sort of retreat that you're talking about?
Yeah, that's absolutely right. So essentially, President Trump is now at a crossroads where he has one of two choices. He can either double down now in the war and actually utilize the Marines who've been moving into the region and start to put boots on the ground. So that might be trying to take control of some of the small islands in the Strait of Hormuz. It could be boots on the ground on the Iranian mainland, even though that's likely to be quite disastrous for the US in the medium term. Or the second choice for President Trump right now is that he could unilaterally withdraw, pressure Israel to also withdraw and end their military operation, and try to claim this as some kind of victory, even though the Iranian regime would stay in place at this point in time. And as long as the Iranian regime is in place, they are still going to have ultimately control over the Strait of Hormuz, in that they can make it too dangerous for ships to pass through if they threaten those ships with attack. So yes, what we're starting to see emerging now is that neither of those two options are particularly good for President Trump at this stage. And because the Iranian regime has managed to survive to this point in time, despite the fact that a large number of the leadership have been killed, the Iranian regime can claim a kind of a victory by saying, we withstood this massive onslaught from the greatest military power globally, and we're still standing.
That's the whole point in, especially what you say in your notes about insurgent tactics, right? If you have a weak player, you just need to survive long enough to apply political, military pressure on your opponent, and this would be the Trump administration. So where do we go from here? And what would Iran be able to call a victory itself, and what could the U.S. take away from here? Because it seems President Trump just wants an end to Iran's nuclear capabilities at this point.
That's right. So what's a sort of a paradox of asymmetric warfare, where we have a very strong military actor, so in this case the US, fighting against a clearly much weaker actor with far less military capability, what we tend to find is that the stronger actor will really overuse their military force, and they will almost use that as though it's the only dimension that matters. So they will focus on trying to completely militarily eliminate the military capability of the weaker actor. And that's basically the playbook that the US is following. They're trying to degrade Iran in terms of its military capability and its ability to operate in terms of eliminating the security and political leadership. But on the other hand, the weaker actor doesn't need to focus on trying to eliminate the military capability of the stronger actor, which is something they would never be able to do anyway. They just need to focus on creating enough political and economic disruption and pressure on the stronger actor to essentially force a withdrawal. And that's what we've seen Iran doing by blocking the Strait of Hormuz and creating an energy crisis that's now gone global and is being felt as far afield as, Singapore and Australia, and by also attacking the Gulf countries, which puts a lot of political pressure as well on the US. So we're seeing that Iran, through using these kind of asymmetric tactics of focusing on the political and economic dimensions, probably will manage to bring enough pressure to bear on the US government, because the war is becoming increasingly unpopular within the US domestic context, not that it was ever very popular in the first place, to actually try to force that withdrawal and then try to claim that as a victory. So for the Iranian regime, their key objective right now is purely to survive. They're not really thinking beyond that at this point in time. They'll start to think about rebuilding the regime if/when the war actually ceases. For the US, there are a few different objectives, and it's not exactly clear when President Trump is going to say, we've achieved our objectives and we can now sort of successfully withdraw. Trump has started to try to claim that actually the Iranian regime has sort of been degraded or collapsed, which clearly has not exactly happened at this point in time. And then there's the nuclear issue. So that's ensuring that Iran cannot develop or commits not to develop a nuclear weapon now or at any time in the future. And again, it's very unclear where that sits. So there might be some kind of negotiated deal around that, but would we now see the Iranian regime as a credible actor after this war? That sort of still very much remains to be seen.
I mean, in fact, he said overnight that he's not even thinking about the removal of enriched uranium at this point, right? So to your point of, I guess, shifting goalposts, I do wonder, though, can Tehran really claim this as a victory? Because they've shown the world how much of a chokehold and leverage they have with global energy supply.
Well, that's right. So certainly, I mean, coming out of this, whenever this war does end, and wars inevitably do end, even if they tend to take longer than typically the stronger actor thinks going into the war, that when this ends, both Tehran and Washington will be claiming a victory from this. So certainly, as long as the Iranian regime stays intact, which again looks like that's going to be the case at the moment, I mean, I think the regime has been severely degraded, and we might see in a sort of 3 to 7 year timeline that actually there is some type of more fundamental collapse or fracturing of the Iranian regime, which is of course also deeply unpopular with, you know, a large proportion of the population within Iran. But in the meantime, the fact that they're staying intact means that they can always pull the kind of Strait of Hormuz trump card, if you will. So as long as the regime remains in place, whenever there is tension with Israel, if Israel ever chooses to strike into Iran, if there is, you know, conflict that rises, tensions that rise with the US, if they feel a threat from the US, they will now always have the ability to say, okay, we are now going to block, you know, that shipping through the Strait of Hormuz. Or they might even take the approach that they want to say going forward, we're only going to let tankers go through the Strait of Hormuz that we feel are friendly to Iran or meet certain conditions that Iran puts forward. So yes, this is a massive leverage point, and the fact that they've chosen to block the Strait of Hormuz so quickly shows that they really understand that and understand the powerful nature of that for the Iranian regime going forward.
Does this war continue with Israel? We haven't heard their take on what this exit plan might look like, and we know that this is a conflict that they've been wanting for a number of years.
So interestingly, the US and Israel, whilst this is a joint military operation, they both have slightly different objectives. So I actually see, you know, retreating from this war or sort of a unilateral withdrawal is much more complicated for President Trump at this stage, because the world is really looking on and associating the current global oil crisis and all of the implications of that with President Trump's specific decisions and actions vis-a-vis Iran. So I almost see Trump or the US in sort of a more difficult position in terms of what they do now. Whereas for Israel and the Israeli government, in many ways, they really have achieved a lot of their objectives. So whilst they might like to see the Iranian regime fall, ultimately, Israel is primarily concerned with degrading any kind of threat towards Israel itself. So as long as they see that the Iranian regime has been degraded, their military capability has been severely damaged, their ability to shoot missiles towards Israel has lessened, that's kind of a victory for Israel in many ways, or they've achieved a large proportion of their objectives vis-a-vis Iran. And then, of course, we have Israel's ongoing boots-on-the-ground operation in Lebanon, which is sort of a different point, and I think that is probably likely to continue for a while, Whereas vis-a-vis Iran, I could see a situation where if Trump decides to withdraw, he would be able to bring enough pressure to bear on Netanyahu to ensure that Israel withdraws as well.
We'll have to leave it there, but it was really great to get your insights. Jessica Genauer, Public Policy Institute Academic Director and Associate Professor in International Relations at the University of New South Wales. In fact, when it comes to the Strait of Hormuz, that will top the agenda between French President Emmanuel Macron, who's meeting Japan's Prime Minister in Tokyo today. The two leaders will also reportedly sign a deal on supplies of rare earths. Let's bring in politics and economics reporter Sakura Murakami for the latest on this. Really a lot going on the geopolitical space globally. What can we expect in terms of concrete outcomes here?
Yeah, I think there'll be quite a comprehensive joint statement between the two leaders. As we've been talking about very much today about the Iran war, there is this, there's an alignment of kind of interests in there. Basically, Japan is very reliant on the Middle East for oil, and Europe isn't as reliant as Japan is, but Europe is very reliant on the Strait of Hormuz for LNG. And so Macron and Takaichi really want to see a calming of the situation. This is something that they've been saying repeatedly over the past weeks, and they've been trying to make that happen diplomatically mainly. If they're sending anything in, if they're going to try and secure the Strait of Hormuz, it would have to be after a settling of the situation. It can't be while the conflict is ongoing. So that's something they'll be trying to work on as well, probably.
And yet President Trump continues to apply this pressure on allies, right? Japan has a whole different set of issues constitutionally why they really can't do more.
Yeah, absolutely. Japan's arms or hands are tied constitutionally because they can't really send troops abroad unless they are under direct attack. And the government has said that the Strait of Hormuz and what's happening in the Middle East, there is a huge impact on Japan, but it doesn't warrant a direct attack to Japan. So although there is a strong security alliance between Japan and the US, Japan can't actually send troops right now. There's also the political angle of it. The situation in Iran is deeply unpopular among the Japanese public. It's not something, the Takaichi might want to get too involved in. And also, probably, ties with Iran have been good, somewhat good for Japan. And so they don't want to really rock that boat either.
To be fair, the Iran war not necessarily popular within the United States either, but any outcomes we can expect on other issues, I understand that critical materials are very important, not just because of the supply chain issues around the Iran war, but this has been going on for a while.
Yes, absolutely. And the other kind of issue that Macron and Takaichi will probably talk about is China. So the critical minerals supply chain discussion will be centering around that, kind of weaning both of the countries' reliance off China. There's also defense and security. Japan obviously has an interest in ensuring the stability of the Indo-Pacific, but France also has some territory in the Indo-Pacific, New Caledonia, and so there have been joint operations between the two militaries. They're looking to kind of deepen defense and security cooperation. So those are probably areas that the two will be discussing and we'll probably be seeing more cooperation on.
Sakura Murakami here, who's going to be following all of the developments around the French president's visit. She's a Bloomberg Japan politics and economics reporter. More ahead. This is Bloomberg.
Well, disruption from the Iran war has pushed governments worldwide to take steps to shore up energy security. Some are fast-tracking renewables, many others, though, falling back on coal, others still turning to nuclear. BloombergNEF head of APAC research, Ali Izadi, joins us now. So this has been a really interesting look at what governments are doing and what they probably could have done in the lead-up to this. But the energy transition technologies, are we seeing them benefit or are we seeing governments move away from them now?
Yeah, very important question. So we could look back at the example of what happened in the aftermath of Russia-Ukraine with, for example, rooftop solar booming in Pakistan. Generally speaking, technologies that have relatively lower upfront cost can be deployed quickly, and those that face lower regulatory and logistical barriers will certainly accelerate. So we are seeing, for example, behind-the-meter battery energy storage also continue to boom. On the other hand, technologies that have significant amounts of upfront capital requirements, as well as require regulatory support, the conflict on its own is not necessarily going to drive their adoption faster. So, for example, nuclear requires consistent long-term support, despite the fact that we're seeing a lot of chatter around it. Actual investment in new nuclear capacity outside of markets such as China and India, which were committed to it already, we haven't really seen a significant change as a result of the conflict.
Ali, and yet the impact here across Asia on energy supply disruptions has been huge, right? Relatively higher than, say, Europe, the United States. Are we going to see this accelerate the energy transition in this region, or will Asian economies just try to diversify their sources of fossil fuels even more?
Yeah, it very much depends on, as you alluded to, on what the governments decide to prioritize. If you go back again and look at, for example, what happened in the 1970s, during the oil shocks, Japan's response at that time was to really prioritize shifting away from oil-fired generation for electricity to build out of nuclear capacity. That required decadal commitments to building of those capacities, and there was consistent policy support to do that. This time around, we've gotten very mixed messages across the region. The other important thing to note is that the longer the conflict prolongs, the higher inflation rates and, as a result, interest rates will be. And again, as we saw in the aftermath of Russia-Ukraine, unfortunately, if interest rates increase, this will also have negative impact on sectors such as offshore wind, which have relatively high financing costs.
What steps do these fossil fuel import-dependent Asian countries need to take now to increase this long-term energy security? And I guess the bigger question is has this been enough of an energy shock, which is still ongoing, for them to prompt those policies now?
One would hope so. As we have seen with multiple occurrence of these sort of unexpected events, such as the pandemic, Russia, Ukraine, and now the resurgence of conflict in the Middle East, governments are dealing with a lot of these more events. But at the same time, we're not really seeing a lot of them planned for the long term. One of the first things that across Asia Pacific is still a challenge is that in many markets, energy retail prices are still directly or indirectly subsidized. Ensuring that energy retail prices truly reflect the cost of energy delivery is very important. When these shocks happen, it becomes really difficult for governments to continue to have the fiscal capacity to actually maintain prices low. And by having market-based mechanism, this can actually make consumers become much more responsible in transitioning away on their own.
BloombergNEF head of APAC research, Ali Izadi. And we do have breaking news out of Japan. We are getting the latest business sentiment data out of these large manufacturers. And the index now rising to 17 for the first quarter. This is an improvement from the previous month. The manufacturing outlook also for the Tankan survey coming in at 14, which is higher than economists had expected. For non-manufacturing outlook, we are seeing that the index has come in at 29, which is also an improvement. Of course, this is a number that we follow very closely in Japan because it shows how corporations are feeling about the economy. But all of this to say that the numbers are coming for the first quarter. And this is, of course, before the start of the war in Iran and, of course, oil prices surging. And this Iran war energy shock also forcing Asian bankers to rethink how they finance the region's booming AI data center infrastructure. President reporter Kari Sue Lindberg joins us now in Hong Kong for more. Kari, so what is this energy crunch, a bigger deal here in Asia for data center build-outs versus the U.S. or EU?
Yeah, Thanks, Shery, for that question. I think the real interesting part is the fact that for the Strait of Hormuz, Asia takes up about 80 to 90% of all the oil that passes through that goes to Asia. And so by default, we're at a kind of a crunch. We have less oil. And especially for a lot of the countries that are oil importers, this is automatically putting strain. And so when you look at kind of where the build out is happening, right, tremendous amount is happening in Malaysia, tremendous amount is happening in Australia. And so when you look at what's happening in Malaysia, just as an example, so in February, right after the war broke out, the Prime Minister made the decision that they would have no more new build-outs of data centers that were not AI-driven. And so what does this mean? This means that they are already concerned about water and power. And this is the first signs of, I think, what we are expecting to see more to come.
So what are bankers worried about then as this conflict drags on?
I think fundamentally what's at stake is that billions of dollars have been poured into kind of on this big bet that the AI boom would pay off in the region given by all the demand and kind of the young population. And the longer this drags on, if fundamentally you do not have power for a data center, essentially the asset is useless. And so the longer this drags on, the risk that this could become a possibility is very much kind of paramount in these bankers' mind, especially as they're looking at, funding some of the largest deals ever.
Bloomberg credit reporter Carrie Sulenberg there in Hong Kong. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching across risk assets, and of course a calming when it comes to oil markets, or a steady, if you will, although of course there is still the question as to even if there is a 2 to 3 week deadline now given by President Trump on an ending to this Middle East conflict, we could still see that happen without a reopening of the Strait of Hormuz. We're seeing New York traded crude still upside of about 0.7% though, but still it was a pretty tremendous relief rally that we saw overnight. That's going to drive markets today. We are now hearing President Trump is set to address the nation on Iran at 9 p.m. Eastern on Wednesday. A quote, important update on Iran, according to the press secretary.
This is the Asia trade. We're counting down to Asia's major market opens. After risk-on session on Wall Street, we saw the S&P 500 seeing its best day since May, with oil prices also falling, Haidi, on hopes that there would be some de-escalation on Iran. And we're now hearing that President Trump will be addressing the public at 9 p.m. Eastern on Wednesday.
Yeah, is this going to be a declaration of the end to the war? Or he already spoke in the Oval Office today, giving that 2 to 3 week deadline, saying that much of the objectives that the US had going into this conflict had been achieved. Of course, one of those objectives for markets is to get vessels flowing through the Strait of Hormuz again, and we're not certain that will happen, even if the US puts an end to the conflict.
At least in the overnight session, we saw a little bit of downside when it came to oil prices. But you said it. I mean, the suspicions around, of course, that flow around the Strait of Hormuz continue. And Brent has already seen its biggest monthly rally on record, gaining more than 60%. And that's really pressured Asian markets that are heavily dependent on Middle Eastern oil. Today's session, though, risk on is the sentiment. We are seeing the Nikkei, the topics, gaining ground early in the Asia session. We have even seen the Japanese yen stabilize a little bit in the overnight session. We're around that 158 level against the greenback. We are seeing JGBs also trading 233 is the level for the 10-year yield. We have seen a little bit of upside in the overnight session. We also got the Tankan survey showing that large manufacturers, at least when it came to the first quarter of this year, remained upbeat, and that number actually improving. We're also getting those trade numbers out of South Korea. We are getting those March exports now rallying 48.3% year on year for the month of March. Is really beating economists' expectations. You can turn the board to South Korea so you can actually see how the market is trading. The trade surplus also beating expectations. $25 billion is at the level. And of course, it's really to do with those chip makers, right? Around Samsung, around SK Hynix, car makers as well. You can see the Kospi gaining ground early in the session, up more than 5%. Korean won, also a little bit of strength towards that 1,500 level. But remember, the Korean won, the Kospi, some of the worst performers for the month of March already, Heidi.
Take a look at what we're seeing across treasuries and sovereign bonds. We saw treasuries mostly on the rise, really correlated with the pullback and the steadying that we see in oil prices. Oil prices still near multi-year highs, so keeping alive that prospect of what the Fed might do next in terms of a rate cut this year. The economic consequences of the war in Iran continue to be front and center. Take a look at the dollar as well. It's been interesting. We've seen the best month since July as this ongoing conflict continues to prove that haven demand for the US dollar is strong, but some of those gains were pulled back a bit as we hear sort of the suggestion that the cessation of hostilities may be close. Our next guest says we may be at the bottom of the sell-off. Markets already pricing in substantial disruption to energy supply. Joining us now is Junbei Liu, who's the co-founder and lead portfolio manager at Tankan. And of course, I think that view was even before we had the 2 to 3 week deadline or sort of time frame given by President Trump, and then whatever he might say in his address to the nation, right, whether it is the end of the war or something else. But when it comes to the core energy supply issue, does that change the picture? Because we know that the president at this point is just like, you know, the nations that need oil, you sort it out yourselves.
Absolutely. Look, for the time being, we're still waiting for more solutions to come through for it to go through. So it's almost two parts. So we know, based on what we know, is that the floor price for oil in 12-month time is below $80. So what that is saying is that at some point it will be resolved. Now, right now, we don't know if it's tomorrow or if it's next week, but we know the solution will come in through soon. But what's interesting, though, in the marketplace at the moment is where do you see opportunity? You know, obviously, we can talk to the things that's being sold off, but the energy stock, actually, some of them represent interesting opportunity. Share price has stopped going higher. However, based on what is happening, it certainly seems like some of the gas prices might remain a little bit higher for the time being, and some of those equities might be beneficiary of those elevated prices. So the Aussie
oil and LNG names, you think there are structural reasons to remain bullish?
Absolutely. So, I would say before the war, about a month ago, everyone thought the oil price will go below $60, around that $60. Now it will be structurally higher. It will be something between $75 to $80, if not higher. So I think full price is saying at below 80, let's say at that price. At that price, it's very profitable for those companies. And also, aside from that, it's, if you look at some of the refiners, some of the refinery has been affected, and that is structurally pushing some of those prices higher. So there is opportunity in that space. But I would say with the current status of the market, the opportunity really lies on what has been sold off in the last month.
Really insulated from the war have, of course, been Chinese assets, right? Do you continue to see opportunities there?
Oh, I truly think the Chinese economy has really turned the corner. Look, we still think that the recovery, it's not we're seeing green shoots everywhere, but it's not the big bang. We have stimulus and all of that. It's just gradual recovery. We see the housing stabilizing. We see a real income growing. We just another few months of the real income growth coming through. Then we'll see consumer increase their spend, and then you have that very positive cycle going through. We're already seeing Chinese consumer wanting to travel more. Unfortunately, they couldn't go overseas, or they go some places, but there's a lot of restriction. They travel within domestically, and then they're purchasing, more conscious purchasing with certain areas. So we do think that China economy seems to be somewhat insulated from this. Yes, we still have tariff negotiation to come through, but I certainly think China is a much better position than some of the uncertainty faced by the rest of the world.
Yeah, especially countries like Japan, countries like Korea that depend heavily on Middle Eastern oil, right? When it comes to these economies, at least when it came to the semiconductor side of things, semiconductor equipment and materials, that was a big boon. We're seeing a little bit more skepticism when it comes to valuations at this point, and that downside in the Philadelphia Semiconductor Index that we've seen the last week or so. Can we see the AI boon continue for some of these markets across Northeast Asia?
Yeah, look, I do think that's a really good question, that we are questioning the valuation. And in today's world, when you can buy very good growth and very resilient companies with structural story, these days it's not just tech, it's actually commodities and others as well, that you can buy better growth than just tech. So I think the AI story is still there. We still increasingly more investment going into, we're seeing all the hyperscalers, what they're doing, we're seeing the technological advancement across the agentic AI and the like. So we think the investment is going to continue to drive that. But we are a little bit, sort of still working our way through on what that means for some different segments of the AI boom, whether it's the software businesses and others, because these companies might have to go through, sort of margin reset and then so that side is a little bit harder. But for now, we do think the AI-driven boom is going to continue, and soon, I think in the next 6 months, we'll see it coming through other industries as well as efficiency gains.
Can the macroeconomic fragility of, say, Japan, Korea, when we are seeing immense pressure both on the yen and the Korean won, offset some of that upside from the real positive trading that we've seen in Japanese, Korean semiconductor names, SK Hynix, Samsung, Kioxia as well?
Yeah, look, I think in general, we look at Japanese equity very, very favorably. I think the Japanese equity is very well supported by real corporate earnings growth. Yes, the currency is under pressure, but I think the Japanese equity is very well supported alongside Chinese equities. Very, have pretty good prospect for next 12 months. I think for Korean equity is a little bit different. It is much more high beta leverage to the whole technology cycle, so it'll be much more volatile. Our view is that Japanese and Chinese equity looks much better in the Pan-Asian sort of portfolio for the time being.
Some of the risks that we continue to see globally, does that give you more food for thought, especially given that we are seeing the inflation and growth concerns? Last week we were talking about inflation. This week we're talking about growth. The macroeconomic environment, especially without knowing when the Iran war will end, where are the fragilities at the moment?
Yeah, look, I think you're absolutely right. The fragility is in where, how long this disruption will be for the oil, for the passage of Straits of Hormuz, and then how elevated the oil price will be, and then what are some of the solutions. Now, forward curve for the oil price is saying it's below 80, and, it's a bit harder for us to say it will be any different in 12-month time. So, I think for in general, today's world is far more volatile than it was. Your risk premium is high, but so we have also saw a 10% fall across many equity indexes. So that represents a pretty good opportunity, and it does have already priced in quite a lot of downside and impact to earnings. We know there will be impact and slowdown to your discretionary, your consumer-facing. Higher oil prices always drive a bit of caution across consumer, corporates. Some corporates more directly impacted. So we will see some earnings impact. But look, how big the impact will be really depends on how long it will last. At this stage, we don't think it will be sustained. And then with the share price fall, we certainly see there's a lot more upside than it is the downside.
You have to wonder whether the haste to try and wrap things up in the Middle East for the administration is also so they can move on to other things like the summit with Xi, right?
That's right.
Do you have sort of any anticipated, takes from that, or does it really not matter at this point? Because the relationship seems to be steady.
Yeah, that's right. So look, I think in general, what we have learned in the Trump administration twice is that the world is just going to become more and more volatile. So your risk premium, it will remain high. Yes, we're moving on from this. We'll have quite a nice bounce in the equities. Then we got to move to the next thing. I think one important thing is that we got to follow what the Trump administration has been actually pushing for. Some of the high agenda items he's been taking ticking them off one by one. So, I think equity markets sometimes can become complacent. Right now, it's not with the, war right in front and center. But when it does have a rally, very quickly we'll forget about what is to come. So, this environment is to control your risk. You be tactical. It has become quite important.
Junbei, always great to chat with you. Junbei Liu, who's the co-founder and lead portfolio manager at Tankan. More ahead on the Asia trade. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Right now, the headline, bad news. It's bad news.
This is a stagflationary mix.
It's a double squeeze for the rest of the world.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The market is tightening financial conditions.
It's not just what's happening present day. It's 5, 6, 7 months out.
The longest first quarter ever continues.
The March Jobs Report, Friday on Bloomberg.
President Trump says the US will leave Iran within 2 to 3 weeks, suggesting his military goals have been largely accomplished. He says while a deal with Tehran is still possible, it's not necessary to end the war.
I had one goal. They will have no nuclear weapon. And that goal has been attained. They will not have nuclear weapons. But we're finishing the job. And I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
Let's bring up Bloomberg Politics editor Laura Davis. And Laura, since we last spoke, we obviously also had the announcement that in about 24 hours from now, we'll be hearing from President Trump as he addresses the nation for an important update on Iran. Is this sort of paving the way for the off-ramp that he's been looking for?
Yeah, this is a relatively rare sort of address from the president. We didn't see anything like this going into the war that you would typically expect to hear the president sort of build the case. But it seems that he is at least starting to pave the way to get out of this conflict. He, has had multiple sort of different goals that he stated, sometimes in conflict with each other throughout this entire process. But he, in that clip there, just mentioned that, he feels like he's achieved the objectives he had in terms of regime change, as he defines it, as well as sort of a military success on Iran's nuclear capabilities. What is not on the table here is the reopening of the Strait of Hormuz. That has been a factor that he's been focused on really for several weeks, trying to get allies to help the U.S. in that. After allies both in Europe and Asia essentially rebuffed him on all his pleas for help, he just said, look, we're going to leave that to you guys, and if you want oil, you can go ahead and take it. Really just, kind of in a really abrupt, if he follows through with his plan, extraction of the U.S. from this war.
And Laura, we're also seeing perhaps a softening of the rhetoric coming from Iran as well.
Yes, the Iranian state media has said that they are open to an end of the war. However, they still have these 5 demands that they're calling for. 3 of those are essentially related to a ceasefire related to strikes, both on Iran itself, their proxy groups, and also a pledge that there will be no more attacks from both the U.S. and Israel. They're also asking for reparations to repair the country. Highly unlikely that won't come to fruition. But the other key piece is that they want authority, and essentially a recognition of their authority over the Strait of Hormuz. That is, because they effectively control the strait already, that's something they already have, and they will potentially come out of this conflict with more power over the global economy, more power over oil trade than they did just 5 or 6 weeks ago.
Bloomberg Politics editor Laura Davison there with the latest on the Iran war. And take a look at some of the big movers on the latest headlines, because we're seeing the shipping sector in South Korea taking a big hit in today's trading session. Really a U-turn from what we've seen earlier in the week when we thought the tensions around the conflict were escalating. And we're now seeing the likes of Hyundai Heavy, also aluminum companies losing almost 14% right there. Take a look also at some of those chip makers in the South Korean session, because we had seen their March exports rising more than 45%, 48.3% year on year, and a big chunk of that was led by semiconductors. Of course, we have seen big gains gains in autos and petroleum products, lifting the trade surplus in South Korea as well. And overall, given that the Philadelphia Semiconductor Index also saw a pop in the overnight session, we're actually seeing Japanese semiconductor-related names gaining ground at the moment. Let's stick with tech because it's all around the artificial intelligence boom, right? OpenAI has closed its largest funding round to date as the company pushes to acquire more chips, data centers, and talent. For more, let's bring in our Asia tech correspondent Annabelle Jewelers in Hong Kong. Belle, some big numbers being thrown around.
Yeah, well, we're talking about more than $120 billion rather of funds being raised. The valuation on that as well, north of $850 billion. So yes, huge numbers. The biggest companies tipping into this is one that have already been reported. So Amazon, SoftBank, Nvidia. For Amazon's part, they're putting in $50 billion of this. So that is contingent, though, on certain milestones being reached. So $35 billion is tied to OpenAI either going public or reaching the technical milestone of AGI or artificial general intelligence. Nvidia and SoftBank putting in $30 billion each. So that takes us to that $110 billion mark. The remainder of that, so $12 billion, has come from a variety of different backers, but these include Andreessen Horowitz, MGX from Abu Dhabi, there's DE Shaw Ventures, TPG, T. Rowe Price. It is an amount of money that OpenAI's CFO is saying gives it a lot of flexibility in terms of where they want to invest their computing resources, build up their AI roadmap. But it is pretty much crunch time for the business because, yes, they're starting to generate revenue, and yesterday they were saying they were generating $2 billion in revenue each month, but still they've been working on trying to refine their product map offering and trying as well to increase that revenue generation capability.
Nvidia also investing in fellow chip company Marvell.
Yeah, that's right. So this one as well came in overnight. So they're tipping $2 billion into what is a fellow fabulous semiconductor name as well. So this is an effort really that continues from last year where Nvidia said it was looking to essentially open up its ecosystem to some rivals and that they would be wanting essentially to give access to its AI service to allow partners like Marvell to deploy customized chips for its customers in data centers. So it is a deal where the companies are going to be working on what's called silicon photonics together. This is sort of a nascent technology, but it has the ability to or potential to scale AI infrastructure by speeding up transmission or data transmission, but using less energy at the same time. So an interesting partnership. It is one actually that Marvell's CEO spoke about on CNBC, but he essentially said it's not a zero-sum game here. Nvidia versus Marvell, it's about trying to broaden the ecosystem and the amount of products for both companies that can be sold.
Annabelle Jewelers there in Hong Kong. We do have more ahead on the Asia trade. This is Bloomberg.
China and Pakistan have issued a joint call for an immediate ceasefire in the Iran war and for safeguarding shipping through the Strait of Hormuz. Both countries urge protection for vessels and crews and a swift return to normal navigation in and around the strait. China and Pakistan are backing peace talks and calling on all sides to refrain from the use or threat of force. When it comes to U.S.-China relations, U.S. Trade Representative Jamieson Greer says he sees stable U.S.-China ties over the next year. He spoke exclusively on Bloomberg Surveillance, where we also asked him whether President Trump's upcoming trip to China could be postponed again.
Is there going to be a delay in the meeting? I haven't heard talk about that, neither internally. I didn't hear that from my Chinese counterpart when I talked to him last week.
When it comes to the tariffs, right now, there's Section 301 tariffs that you're looking into when it comes to China. And we've seen China actually have their own announcement that they're going to investigate U.S. companies. This tit for tat we might see in the trade between Beijing and Washington, back to where we're almost what it feels like a year ago. Do you think that's going to hinder the U.S. from getting back to the 20% level they were at before IEEPA was struck down?
I don't think so. When you look back to the Busan agreements, the agreements we achieved with the Chinese last year, we were seeking stability. We were seeking to achieve a level of tariff application on one side and a flow of rare earth minerals and things from the other side. Both sides want stability. Both sides want to see continuity. The Chinese know that the United States is trying to control for our giant trade deficit we've had with China for a long time, which went down by 30% last year, by the way. So I don't think it's going to...
But China's imports to other countries into the United went up, and then those countries are importing to the United States. Don't you have an issue with transshipment at the moment? So
there's always been an issue with transshipment, but when you look at our shipments from third countries outside of China since April, right, since Liberation Day, that deficit has gone down by 17%. So while there may be some transshipment, overall our trade deficit is going down. It's going down with China. It's going down with the rest of the world. It's going exactly the right direction. At the same time, wages are going up in America. Productivity is going up.
Do you think you're going to get to the 20% level?
Well, I can't prejudge the investigations, right? At Section 301, we have to go through the legal process. We have to collect information. It's quite public. It's quite transparent. We know what the nature of the deal is that we struck with the Chinese. So we will see. All I know is that the president, for sure, is going to keep protecting our economy. He's going to protect our producers so we can continue to have increased production in the U.S., increased wages here.
If China plays hardball, though, not just with their own investigations, but potentially bringing rare earths back into the foray. I know they have basically till October. There's a deal on the table. Potentially then, would you look to maybe decrease the tariff level?
Well, from our perspective, we're looking for stability. We're trying to we're trying to get the trade deficit reduced. We're trying to increase manufacturing in the United States, and we're trying to increase real wages, and all of that is happening. So we don't see a need to change our policy. The Chinese want stability. We want stability. I actually see a positive agenda with China going forward, where we learn to manage our trade with each other, where we pick the kinds of things we want to be selling to each other, things that are mostly non-sensitive, to avoid some of the national security elements that prove challenging in negotiations. I see stability with China over the next year.
U.S. Trade Representative Jamison Greer, they're speaking exclusively to Bloomberg's Anne-Marie Hordern. Let's take a look at European futures, where we're seeing that jump at the open. This follows in the previous session where we already saw European stocks rising, or at least trimming those monthly losses after the initial report that President Trump was signalling he's willing to end the war in Iran. We've since heard, of course, with those remarks given in the Oval Office, that Trump is looking at a 2 to 3 week period. And we are also expecting just about 24 hours from now that he will address the nation with an important update on Iran as well. At the moment, it is all positivity. Euro Stoxx 50 futures up by close to 2% there. We're seeing Asian markets, of course, tracking those the gains that we saw overnight. And at the moment, things are looking pretty bright. But I guess the robustness of this rally is really what we need to look at, Shery.
Yeah, and how sustainable it is as we head toward President Trump's 9 p.m. Eastern Wednesday address about Iran, right? Take a look at how currencies are trading, because we have seen the dollar weakening on those de-escalation hopes, this after gaining for the last 5 sessions. So we're seeing a little bit of strength in the Asian side of things, with the Korean won now gaining 0.6%. Remember, it was at a 2009 low. This is Bloomberg.
Take a look at this relief rally that's sweeping Asian markets, particularly when it comes to very strong gains across Japanese and Korean equities. The Kospi is up by over 5%. The Nikkei 225 also surging. A lot of these sort of expected gainers there, the auto companies, some of the financial names being rotated back into sort of growth and cyclicality, which reflects the Wall Street session that we saw overnight as well. Some of the laggards, also unsurprisingly, the oil names, the LNG and energy names that have gained so strongly over what this past almost 5 weeks also of this conflict. We're also seeing the shipmaker names on the downside as well in the Asia session. Here in Australia, upside of 1.7%. We've also heard that the Prime Minister, Anthony Albanese, will be addressing the nation this evening as well, Shery.
And Heidi, we do have breaking PMI numbers across Asia right now. We're seeing a little bit of improvement when it comes to the final March number for Japan, coming in at 51.6 and still in expansion territory. South Korea's also improving to 52.6. We have seen really the PMIs across the board firmly in expansion territory. A little bit of softening for Taiwan, but it's really interesting because we also had the official PMI numbers from China, and in fact, they expanded after 2 months of contraction as well, Heidi.
Take a look at what we're watching when it comes to oil, because this is quite an interesting story, given that even with the assumption that perhaps that 2 to 3 time frame for the ending of the war proves to be correct, we are still seeing some upside when it comes to trading in energy markets. Gold, on the other hand, seeing the worst month since 2008. Really, that haven demand has lost its shine despite these hopes that the war is near the end, despite the fact that we've seen a little bit of a come down for the US dollar as well, which is benefiting some of the Asian FX names. But it's quite interesting, the dynamic that we're seeing across energy markets and commodities at the moment. So let's get some more analysis on that. With me now is Daniel Hynes, who's a senior commodity strategist at ANZ, and it's a great time to talk about this dynamic, right? Because is what we're seeing, the reticence in energy markets, the fact that we could see an end to the war without a reopening to the Strait of Hormuz?
Yeah, no, I think that's really key, because while the threat of further escalation may be subsiding a little bit on the back of those potential talks, or at least the US ending its conflict with Iran, the fact that the Strait will remain effectively closed, I think, is clearly a major issue for energy markets. And I suspect you would still find Iran holding sway over the transit, the key waterway there, which will effectively put the energy markets in the same position as before, when the US was clearly attacking Iran. So. The situation doesn't.
What's your modelling for the scenarios? Is that they start charging tolls? They obviously have already been giving preferential, vessel right of way for friendly nations to Iran, or what?
Yeah, I mean,
Trump just says, you go get your own oil to every other country now.
Yeah, I mean, it's really hard to put a finger on one particular sort of scenario that could play out, but certainly the prospect, I suppose, of production being shut in as a result of the closure is really where we're focusing our attention on now, because in a few weeks' time, we'll see that producers will have to start capping or plugging wells, which has longer-term implications. I mean, we're talking about weeks, if not months, before these things can be reactivated, and so the situation changes from a short-lived disruption to trade to a longer-term disruption to supply, which I think for energy markets is obviously key.
And it sounds like there are pretty strong structural reasons why there might be continued demand for oil and LNG, even in the absence of the conflict.
Yeah, no, absolutely. I mean, we're obviously thinking, starting to think about the longer-term implications around the energy transition, and we've certainly seen signs within, the energy markets. For example, a little bit of gas to coal switching going on, particularly in Asia, but really that's early days, and I think the demand outlook looks relatively stable, and that obviously means that markets, if they need to rebalance, they're going to have to essentially force demand destruction, and I think that's where we're really on the precipice of at the moment, whether these supply disruptions are just too great to offset, which we feel they are. The market will have no choice but to force demand lower through higher prices.
And Dan, what about transitioning for shipping routes and the redrawing of maps? Could we see that now that we have seen this clear risk on the Strait of Hormuz?
Yeah, I think the longer-term implications are that there'll obviously be a much greater focus on energy security, and certainly the producers will have their part to play there. I mean, Saudi Arabia developed that east-west pipeline for this exact moment, and I think that will be I think the cornerstone of further developments and investments in the energy sector itself. But certainly, the security supply issue for consumers will be a key one. Now, that could go various ways, longer-term sort of supply contracts being entered into, but also alternative supplies as well. But the energy system has completely been upended, and I think the longer-term implications are really only starting to emerge at the moment.
And in the U.S., gas prices topping $4 a gallon at the pump. Does this mean long-term implications and changes for the U.S. energy market as well? More activity coming from shale drillers?
Yeah, well, you'd think so, but certainly the drilling activity numbers that we've seen just over the last few days suggest that they're remaining relatively cautious at the moment. The number of rigs operating there fell last week, according to Baker Hughes data. So it feels like they're still, I suppose, looking at this as a short-term sort of phenomena, and that the supply disruptions will potentially ease, because I think they don't want to get caught, drilling these, more expensive wells and then suddenly find that oil prices are back below sort of, or back to sort of pre-conflict levels, which would leave them economically weaker than they were prior to it. So you would need to see these supply disruptions persist for months, I suspect, before we really get a strong pickup from the US shale industry.
It's not just oil, right? Aluminium, best month in 2 years. A lot of these metals and commodities markets are being disrupted. We're expecting to hear from Prime Minister Albanese to speak about the energy security situation. When you write about persistent insecurity and uncertainty, even if this war is declared over, what do you think needs to happen from a policy perspective?
Well, I think certainly from Australia's point of view, stronger or larger sort of stockpiles, emergency stockpiles. We've been holding, well under sort of the IEA recommended levels, and that clearly is, I think, the first port of call. But then developing stronger relationships with, our key suppliers as well, and that goes back to that, those contracts becoming. Much more important around supply delivery, and diversifying the sources as well. Not being exposed to one particular source, opens you up to risks around that supply suddenly being at risk. So I think diversity, strong relationships and contracts, will be something which I think a lot of countries will really start to focus on now.
When do you think, if we assume the level of damage that's been done to some of the infrastructure and assets, and perhaps a quicker than expected reopening to the Strait of Hormuz, how much lead time do you think there is for supply to recover? Yeah,
well, it's a good question, because I think at the moment, we could potentially be looking at weeks. But if this persists into late into this month and into May, then I suspect we could be looking at several months before we get any sort of sizable pickup in output, and that's because the shut-in, the wells that are being shut in, take time to be re-drilled and all the inventory released. So, we could be looking at a pretty tight market this year. And when you consider where we were at the start of the year, we're looking at one of the largest sort of surpluses we'd seen for some time. The thing's been flipped on its head now, and I suspect it's going to ultimately keep or be a structural change or shift in the oil market for the foreseeable future.
Yeah, remember the start of the year, it feels like an eternity ago. Daniel Hynes, good to have you with us, senior commodity strategist at ANZ. And of course, security in the Strait of Hormuz will top the agenda when French President Emmanuel Macron meets Japan's Prime Minister later today in Tokyo. The two leaders will also reportedly sign a deal on supplies of rare earths. Let's bring in politics and economics reporter Sakura Murakami. Really a lot to discuss at this point.
Yes, absolutely. And overnight, President Trump kind of singled out France and saying, they haven't been supporting the effort the American war effort in Iran. So it'll be interesting to see what Macron has to say on that, whether he will say anything. But I think the position that Macron is in right now, and also where Takaichi was just a couple of weeks ago in terms of balancing their interests in the Hormuz Strait and in the Middle East with what Trump is doing and their relationship with Trump. They're kind of in a similar situation, and their interests are aligned in terms of wanting to see a very swift, speedy resolution to the crisis in the Middle East.
It's a very difficult situation for U.S. allies across the board, as you said it, right? But more specifically Japan, because of its own constitutional limits of what they can do when it comes to security overseas.
Yeah, absolutely, yeah. And, when Prime Minister Takaichi met with President Trump earlier this month, she did say that she explained what Japan can and cannot do. And it seems that Trump has come to some sort of understanding on that. The direction of his ire has kind of turned toward NATO and Europe mainly, and he hasn't been as persistent that Japan should pull its weight in terms of securing the Strait of Hormuz. But with Trump now saying that, countries should fend for themselves, that kind of leaves, especially Asian countries, which are very reliant on Middle Eastern oil and energy, in an awkward position about how to do that.
Super quickly, those supplies, especially of critical minerals, also on the table.
Oh, yes, absolutely. There is, the Middle East is kind of a big hot topic, but Japan and France will definitely be talking about the presence of China, not relying so much on the Chinese supply chain, especially in critical minerals and also in defense as well, in terms of defense as well. So.
Sakura Murakami, Bloomberg Japan politics and economics reporter with a busy week following that summit. More ahead. This is Bloomberg. Take a look at how Asian chip makers are trading, because we saw that jump in the overnight session of the Philadelphia Semiconductor Index already after 3 sessions of losses that took the downside to about 10%. And remember, there have been concerns around the AI trade, especially after Google's release of TurboQuant and what that might mean for flash memory and the likes of Kioxia and other players in this space. But we are now seeing the upside, including equipment makers across Japan like Tokyo Electron. Now, a former president of Baidu says AI tokenization is exploding in China. Zhang Yaqin now runs the Institute of AI Industry Research at Tsinghua University in Beijing. He told us that so-called tokenomics will help Chinese engineers work around high-end chip shortfalls.
Chip-wise, China is behind, but China is ahead in terms of electricity. China is ahead in terms of the AI plus the application. China is a little bit ahead in those, but China is behind in chips. China is behind in probably the frontier models. But it's different. China, in the frontier models, China take a open source or open weight approach. And so the China's model is open and also is more economical. The token is cheaper by almost order of magnitude.
Daily token use in China has grown more than 1,400 times to over 140 trillion in March alone, from 100 billion.
Yeah, this is it's remarkable, right? And this token is not only used by from within China, but also by around the world, right? If you look at this is used by Europe, this is used by Southeast Asia, and this is used by a lot of the startups in the United States.
McKinsey's Joe Nye was telling me at the China Development Forum, it's become one of China's biggest exports.
That's right.
And tariff-proof.
That's right. Well, the good thing here is you're able to produce those tokens right from China. Use the electricity here, use the data center here, use the model here, use the chip here, use the full stack here. And then you can export the capability, the tokens, and benefit people around the world. The whole notion for one-person company or company requires very few people is very exciting, because right now with that, if you have access to token, right, you're able to pretty much do everything. You use the coding agent, and you just tell them.
You can build your own AI agent, basically.
Exactly.
What is it, Yang Longxia?
Longxia, that's right.
That raising your own lobster. That was the open cloud moment.
That is
opening up opportunities for these one-person companies.
That's right. There's overwhelming enthusiasm to embrace these new technologies. Open cloud obviously is a wonderful open source product phenomenon. But if you look at in China, there are at least a dozen different versions of cloud, different kind of clouds, and they actually work better than the original open cloud. So it's just a form of agency, right? The agent that's able to autonomously implement your task, not only to have a dialogue like this, but also able to take actions and do things for you. That is the next mega trend of AI. It's agentic AI.
How many generations behind would you say China is right now with the big data center GPUs that you just talked about?
I would say probably, I'm not an expert on chips, but I would say probably 2 generations behind. But if you look at overall, right, this is a system engineering. Right? You have to look at not only per chip, performance per chip, but also the collective performance of many chips. And the networking, the memory, and the whole thing. Right? And the end result is the quality and the price of the token you produce.
Right.
I think China is very competitive.
So former Baidu President Zhang Yaqin there speaking with our Chief North Asia correspondent Stephen Engel. Well, Nike shares tumbled in late trade after the company forecast a surprise drop in revenue for the current quarter. That's just adding to investor concerns that the Iran war will derail its turnaround efforts. Our Bloomberg Intelligence senior analyst Catherine Lim joins us now for more. So let's talk about the major market of China. Is that reset taking longer than expected?
Well, I guess, from what Nike has just guided a couple of hours ago, whereby in the fourth quarter, they are looking at a steeper 20% Greater China decline, which is actually worse than the 10% that they've just reported. I do think that it suggests that, the reset will continue to suppress the near-term sales. And really what we have actually seen from data that we've collected is that, they are trying to actually cut back on discounting, trying to actually clean up their digital channels itself. Well, the company just seems like, they are willing to sacrifice the revenue to improve the marketplace quality and profitability, which is all good, but it just means that the turnaround is going to be, more brand health driven and probably slower than what consensus is expecting.
So how much pressure are we expecting Nike to put on sportswear companies like Anta, Li-Ning, Puma, for example, also trying to gain market share there?
Well, I guess, the reality is that there are a couple of categories that we are seeing good demand from the Chinese consumers, whether it's running, tennis, golf, or outdoor, which has prompted Nike to, open and they will be opening their second ACG store in China itself. I think, these popular categories will increasingly become more crowded. And that really does mean also that, for peers like Anta, Puma, Li-Ning, Irma Sports, which focuses on these categories itself, well, the pressure will get, higher for them in China.
What do they need to get right when it comes to rebuilding that market relevance then?
Yeah, I think that's a great question because we definitely are seeing the Chinese consumers becoming more discerning, more selective in their purchases. And I think it all boils down to Nike really needs to sharpen the product differentiation and, better marketplace execution. We've heard China, whether it's the digital side of things, whether it's the AI application side of things, there are ways to actually communicate and get closer to consumers, particularly when you try to actually sell differentiated products. So I think that is an area that they need to focus on.
Catherine Lim there with the latest on Nike. Bloomberg Intelligence Consumer Technology Senior Analyst joining us from Singapore. We have more ahead. This is Bloomberg. Here are the top corporate stories that we're tracking. Indigo has named IATA Director General Willie Walsh as its next CEO, just weeks after Peter Elbers resigned. Walsh is expected to take charge of India's biggest airline by early August, after his tenure at IATA ends in July. Indigo's mass flight cancellations in December triggered one of India's worst aviation crises and resulted in a subsequent plunge in quarterly profit. Huawei's growth decelerated last year as Apple's iPhone 17 made headway in China and domestic challengers emerged in AI chip making. The maker of smartphones and chips reported a 2.2% rise in 2025 revenue to $126 billion. That increase was down sharply from about 22% the year before. China Vanke posted a record $12.8 billion loss last year, marking a second full-year loss since its IPO in 1991. It shows the deepening problems facing the developer ahead of a wall of upcoming debt maturities. Vanke is seeking a long-term debt resolution plan and pledging to find new sources of funding this year.
One to watch, Shery, and we are, of course, watching some of the consumer names, sportswear makers in China, in light of the disappointment and disappointing numbers from Nike. While this has been a market that has been a little bit less correlated to the broader geopolitical shift, we could see some strength when it comes to the likes of some of the financials, the cyclical and growth-related names. Oil may see some downside too, but broadly, Chinese stocks have already been outperforming global peers since the outbreak of the war. That market's gauge falling just 4% compared with more than 10% if you take a look at markets like Japan, South Korea and India. We're seeing quite a bit of upside at the moment, but of course a totally different story when it comes to markets like Korea today.
Yeah, we're hearing from the South Korean finance minister saying that the won is showing significant volatility and that the excessive won weakness isn't helpful to the South Korean economy. And you can see a little bit of strength there. This is Bloomberg.